Mortgage interest rates rose this week, and I also received a phone call from a good friend of mine, John Niemeyer at Exit Realty, asking about open house traffic and any stats I might have. So this week, we're going to tackle both of those questions and answer the question, is the rise in mortgage interest rates cooling the real estate market? All today on Simply Des Moines Market Values. Hey there, welcome to the show. It is week 16. It is 1 week before the end of the month. Now, next week's show will happen just prior to the end of April, so we will not have an end of month show next week, but we're going to talk to you at the end of the show about what I'm going to cover next week. But for this week, I'm trying to answer the question, are rising mortgage interest rates cooling the real estate market? And there's some signs out there we can kind of start to watch and look for, and I would say there's some signs that maybe point to that, but I don't want to go all the way in and say that that's happening yet. But let's kind of jump in and see a little bit about what's happening in the real estate market and how interest rates are affecting it. Now, what last week I talked a little bit in depth about mortgage interest rates, so I do have a couple more slides this week that you haven't seen before, and hopefully give you an idea of maybe how rates are affecting. So April 18th, the 30-year fixed average mortgage interest rate by Fannie Mae recorded interest rates at 7.1%. And if you look at that chart right there on the right, you can see that the purchase power, and we'll talk about how this purchase power comes into play with a certain dollar amount, but you can see that the purchase power actually went down week over week, and it's continually gone down the last few weeks here. Um, and of course, most of the headlines this week were about the Federal Reserve. Rates remain elevated. Could they fall later this year? All the talk is that the Fed is probably not going to do anything with the prime lending rate until later this year. So we may be stuck with these upper sixes, low seven interest rates here in the next few weeks. We do feel like they're gonna settle a little bit, but as of this past week, you can see they are at 7.1%. And so this is a graphic that kind of looks familiar to you from what I've shown you in the past. This is the 30-year fixed rate from January 22nd to date. And why did I go back to January 22nd? This is back when the year that rates really started to rise. And you can see here that this rise went pretty dramatic the year of 2022. And right here is the last time that interest rates were above 7%, or above the current 7.1%. That was back in no, I'm sorry, November 30th of 2023. And the actions that happened by the Fed that caused a lot of these rates to come up and rise like this, you can see that in January of 2022, the Federal Reserve started raising the prime lending rate, and then it started out at a 1/4% rise. March, another 1/4%. Then it went into a 0.5%, and then we had 4 months where the interest rate rose. The Federal Reserve rate rose by 0.75%, and then a 0.5% and on up. And we've been here at 5.5% for the prime lending rate, at 5.5% since around July 25th or something like that, whenever that date occurred. And we've remained there all the way to date. And we're kind of watching for this rate to start to go back down, and hopefully interest rates, 30-year fixed rate mortgage rates will start to follow that trend down. But as of right now, that's not happening. And you can see here's that little upturn in the 30-year fixed rate average rate, putting us at 7.1%. That's the highest since November 30th, when it was 7.22%. So how is this really affecting the market? And I showed you that buying power graphic earlier on here, but this is really the first time that buying power so far this year has dropped below 300,000, and that's based on a $2,000 principal and interest payment on a 30-year fixed rate mortgage. And these numbers obviously change if your principal and interest payments only $1,000 or $1,500. Proportionately your buying power is lower. But this $2,000 principal and interest payment buying power is kind of the middle point. It's not really the median, but it's kind of the middle point of where most home buyers are purchasing right now. And this just kind of shows you, that at the earlier this year, you could be buying somewhere around that $310,000 buying power mark, and now it's below that. This is not including taxes and insurance. This is just the principal and interest only portion of your payment that's affected when rates go up and down. So um, to kind of get an idea if this is affecting the market, well, I always say that as interest rates rise, so does home inventory, and this is kind of true to form. Last week we broke the 3,000 home mark for homes on the market, and this week we are above that, even higher. We're at 3,025 homes on the market. That's all homes for sale. And you can see that, that's 585 homes more on the market than we had at this time a year ago. And that should be a good sign, and that should be spurring the market on. But it's really, unfortunately, it's not. We would tend to like to see as the inventory rises in a good heavy spring market, we'd like to see that inventory start to get ate up as home buyers jump in the marketplace. And we're just not starting to see that yet. So this 585 homes on the market overall, that's for all homes. Take a look at this. This is existing homes. Of that 585 homes on the market, 542 of those that are increasing are single family homes listed on the market. And this is kind of the bread and butter of our marketplace. New construction makes up a portion both in the condo and townhome market, and then our existing or resale homes, we break that down by existing and condo townhome markets. And 542 of that 585 increase are existing homes for sale. So that tells me that we may be seeing a slowdown in the existing home sale market, and seeing where, this inventory is increasing in a spring market where it should be decreasing. You can see last year it was kind of going along steady, where this year we're on the rise. As we get closer to the summer months, we start to see this rise, and then inventory typically does continue to rise through the end of the year. So we're going to watch this over the next few weeks and see if this is continuing to rise without seeing the pending sales rise. Speaking of pendings, you can see that again, if homes were being purchased each week at a pace as of last year, we're quite a bit behind here. We had just under 250 homes went under contract last year at this time, and the 320 some homes went under contract a year ago at this time. So we are lagging behind, and this is just again showing us that maybe those interest rates are affecting home buyers and discouraging them from getting out and making offers at this point in the marketplace. So uh, other indications we like to look at, are we seeing increases in price reductions? When we see a homeowner says, you know what, our home isn't selling, it's staying on the market longer, one of the actions is let's reduce the price of the home. And we're starting to see that. We've seen 1, 2, 3 weeks back, we've had increases. I keep saying increases, but price reductions, more price reductions happening week over week. This week here happened to have been Easter weekend, so it kind of maybe took a little break there. But the weekend prior to that, we had a pretty good jump. We had the most homes that had price reductions, um, all the first quarter and into the part of the second quarter here. As far as percentages of home sales that fall through, these are what we call bombs or back on market. We're trending right now a little bit heavy. We're at our average last year, 24% of our homes that were under contract would fall through in a weekly average. And this year we're currently looking at about 27%. So 3% more homes are coming back on the market on average so far year to date than they were last year. And just looking at that year over year, this past week we had several that you know came back on the market there. So that's another sign that maybe buyers are getting a little skittish, and they see the rise in interest rates. Maybe I'm just projecting here. Maybe they had not locked interest rates and they were under contract, saw the rates rise, and they said, you know what, we're going to back out and take time. Or maybe they were asking, with the rise in interest rates, maybe they were asking home sellers to do additional repairs that maybe they would maybe normally accept. So it's hard to say, if those are the things that are kind of keeping us our market going. Now, to John Niemeyer's question from Exit Realty. Thanks, John, for asking that question. And you can also do this each week. If you have a question or you want to see a specific graphic, be sure and email me or text me and let me know what you want to see, because I'll add that to the show. This is a good indicator too of maybe how the market is changing just a little bit. Now, this is the week. This week we had 991 homes open house that we will have 991 open houses this weekend. I'm recording this on Sunday late morning. That's the high for the year so far. We like to see that number. We feel like we're really doing well when we have over 1,000 homes open on a weekend, and we're currently at 991. Um, the little drops there, I put the asterisks in there. We had a winter storm in January right over here, and we also had Easter weekend. So those are two weekends that we're going to normally see, either weather events or holidays that will drop the open house traffic. And you can see that Easter fell a week later last year, so that's why that was dropping there. But for the most part, we're trailing pretty much ahead of last year on open house traffic as we get into the heavy spring market until we take a look at maybe where these open houses are coming from. And just like single family existing homes, we look at new construction. New construction's pretty much right on track, although they may be a little bit lower than normal. They started off fewer open houses in the first 2 or 3 weeks of the year, which again maybe was all related to that storm weather. Hard to say, but they're starting to come back and equal out as to where they were last year here within this past week. But look at existing home open houses, and this is telling a tale here, I believe, that homeowners, when homeowners are sitting there and they're going, what can we do to sell our houses? One thing may be a price reduction. The other one, and the most common request is, hey, let's do an open house. Let's see if we can't get some traffic in another way. And this has been predominantly the strategy that existing home sellers have had all year long, with the exception of those two anomaly weekends with the winter storm and the Easter weekend. We have consistently had more open houses in 2024 than we did in 2023, almost to the point of, let's see, what is that? Just under 150 and over three. So double the open houses this week compared to a year ago. So that's, again, maybe that's just a sign. So these are the things we try to look at. I don't want to try to read too much into the tea leaves at this point, but it's all some of these little signs. You start to see two or three of them together, and this is kind of a sign that says, maybe the market is being affected by one factor or another. So anyway, so for next week's show, we're going to talk, because it's just before the end of the month, we're going to talk about milestones and targets. So we'll talk about, we did hit a milestone this last week, which we'll hold that off and reveal that at next week's show. And then we'll kind of look at some of the targets. Where do we expect home sales to end the month and end the quarter and end the year, and maybe pricing, where we're going to see some of these targets for pricing. So that's really it for the show, guys. Thanks again for joining me, and we will see you all again next week. Be sure and subscribe to the YouTube channel if you haven't done so already. And for those of you who have hit the like button, I appreciate that. It helps the system or the show to get out to new viewers as well. So be sure and head out to www.desmoinesmarketvalues.com for all the show graphics and links to all the past videos. So take care. We'll see you all again next week.